one word that best describes Muthoot Capital today.
Unless you are satisfying your investor in terms of growth with profitability and all that, you are out of the game. And also a team which was depleted. So we did not have HODs. Our sales team was depleted, collection team was depleted, etc. That was indeed the most challenging time in our career here in Muthoot Capital Services.
Why this pivot in business, and what gives the signal that this is the right direction for the business to go ahead? As a CEO, what is the one thing that you don't want the company to lose? When you look at a company, it's tell where the company is currently situated. But it's the people who are behind the company who can tell why is it here and how did it get here. Hello everyone and welcome to the GoldenPi's Industry Speak series. This is the 30th episode from GoldenPi, India's leading online bond platform. Today I'm truly delighted to welcome Mr. Mathews Marcos, CEO of Muthoot Capital Services. There are some very interesting decisions which are being taken at Muthoot Capital, and who would be a better person than Mr. Mathews himself to explain to us about the background. A very warm welcome to you, Mr. Mathews.
Thank you, Abhijit. Thanks for having me.
So let's get started by knowing a little bit about you first. You have spent a significant portion of your career in the financial services. What has the journey taught you about building a lending business in the Indian landscape?
Yeah, so Abhijit, I'm getting close to about 30 years of services in the financial services sector. And I have started, right from the very ground level till I, made up my way to the current position as CEO. So I think the one advantage that I carry is that I have seen all the problems firsthand that the people at each level faces. Suppose, somebody who's a lateral hire joining in the middle or senior management from some other industry may not have that privilege of having that hands-on experience of the problems that one faces in the front line and the middle level roles. So, I think that way I'm privileged to have been there, done that, and been a part of that growth journey. So the learnings have been immense, huge amount of learning. But I think broadly, I think the learning has been the fact that, in financial services, whatever product you are handling, we have this habit of branding products like two-wheeler car, CV, housing, gold, etc. But the product that we all sell is money. So that's the only product. All others are just collaterals. Right. And customers will, buy or take your product only for three reasons. First is solution. So customer is not coming to you for money. He may need a two-wheeler, he may need a house, he may need a loan for consumption, and is coming to you for a solution. So if you are able to provide a solution, he will buy your product. Right. Second is convenience. If you are able to give it as per his convenience, he will buy your product. Otherwise, we wouldn't have needed so many NBFCs and so many banks. One bank, which is the largest bank in the country, would have been able to service the requirement of all the customers. But everybody don't go there, right? So maybe because they look at convenience, they may not be willing to stand in queue, they may not be willing to do multiple visits to the branches, etc. So convenience is a factor. And third is experience. What kind of experience do you get during the loan journey, after the loan journey, till the closure of the loan? So I think these are the three factors which will decide whether the customer buys your product or not. And otherwise, however well you package it, advertise it, you have great brand ambassadors, but people will not buy your product unless you provide them with these three things, which is solution, convenience, and experience. That's been my learning been in this industry for about 30 years.
So three pillars of actually building a lending business: solution, convenience, and experience. Great. So now let's move a little closer to home. To start with the basics, what is the story of Muthoot Capital, and how is it differentiated from the a lot of other Muthoot businesses that we know about, which is there right now, pretty much in adjacent spaces.
Okay. So, I think the story of Muthoot Capital will be incomplete unless I talk about, the Muthoot Group as a whole. So, I don't know whether you're aware, we have a legacy of about 138 years. And if you look at the larger India INC, there is only 1.2% of the family businesses which have survived over 100 years. Okay, so we are one among that 1.2%, who have survived, and we've not even just survived 100 years, we are at 138 years and counting. So we've seen the colonial era, we have seen the independence era, we have seen the license Raj, we have seen the liberalization, we have seen the globalization, we have seen the digitization, we've seen demonetization, we have seen COVID, and now AI. So I think that's the wealth of experience we as an institution has, and I think that is irreplaceable. That experience is completely irreplaceable. So if I were to quote Charlie Munger, he says, "The young man knows the rules, but the old one knows the exceptions." So we know both the rules and the exceptions, which is, I think, the phenomenal advantage to have. Coming closer home to Muthoot Capital Services, so within the group, we have a very, very clear demarcation. We don't want to get into competing lines of businesses. So in the flagship company, which is Muthoot FinCorp, we do predominantly gold and some other smaller businesses like, business loans, supply chain finance, etc., etc. In the Muthoot Microfin, we completely do microfinance. In Muthoot Housing Finance, we do home loan and LAP on the affordable side. And under Muthoot Capital banner, we do everything on wheels. So our objective, our motto is turning wheels, changing lives. And we are currently with two-wheeler, car, CV and CE construction equipments. We will shortly be getting into tractor, and eventually we want to be doing everything related to mobility. Not just wheels, but everything related to mobility.
Got it. So that brings me to my next question, and which is basically from a detailed report that I was reading on Muthoot Capital, and I understand that previously a large part of the business was on the two-wheeler loans. Now, gradually, there's a very strong focus into, like you mentioned, on cars, commercial vehicles, construction equipment, and also tractors. Basically, anything which is basically related to mobility. And I believe very soon you might foray into the EV sector also, which is, a booming sector in India right now. Why this pivot in business, and what gives the signal that this is the right direction for the business to go ahead in the current times?
Yeah, so that's a very important question for us, and I think this is a question that we've been asking ourselves before we took that pivot. And the answers are multiple. So number one is that at a group level, we regularly do a scrub on our base to see what our customers are doing. Okay, so across the group, we see that there are a lot of customers who are already taking some of the products which we already have as a group, but they are taking it outside the Muthoot ecosystem. Okay, so you would know that acquiring a customer for the first time is the initial cost, but cross-selling an additional product doesn't need any additional cost because the customer is already yours. Okay, that's the lowest hanging fruit, if you can see, in the overall ecosystem. And therefore we thought that we were losing a lot of revenue, and often on one product alone doesn't give enough revenue for the customer to become profitable at a unit level. So that was a very, very natural corollary that we all the entire group starts cross-selling each other's product. And this decision to pivot into other products on wheels was a decision based on that. Second, of course, is that two-wheeler being a very small tenor, small ticket size loan. Okay, it's a 24-22 months loan on an average. Average ticket size is about 80,000-85,000. The runoff on the book is very, very fast. So if I were to do only two-wheeler, I would disburse about 200 crores in a month, and I would collect about 180 crores in a month. So I'm growing only by 20 crores because the churn is very, very huge. Okay, so if you have to build a substantial book, which some of the other players who have started business alongside us have reached, we need to move to larger ticket, larger tenor loans, and that was one of the reasons why I moved into cars, CVC, etc. And third and most importantly, this is also a way to de-risk the portfolio. So you would know one product, having only one product is always a huge risk. There is a concentration risk. Okay, if one industry doesn't do well, you stand a huge risk of losing market share, losing profitability, and all that. So I think these are the three broad factors based on which we made this decision. And I think in hindsight, I think it's been a very, very good decision to make.
So you're seeing good signs post this pivot in the direction in which the business is progressing.
Yes, absolutely, absolutely. So we've seen considerable improvement in our overall portfolio quality because the delinquencies on the new products that we have started are much lower than the two-wheeler, which inherently is a slightly higher delinquency product.
Got it. So top three reasons, if I have to, actually rephrase what you said, or rather, use your specific words. One is a tremendous amount of cross-selling, which is available from the large cohort of customers that Muthoot Capital serves today with zero CAC, because it is the same customer who's already been
not
acquired.
Not just Muthoot Capital, but across the group. Across the group, even on the FinCorp base and Microfin base, people are going outside and taking two-wheeler loan, car loan, CV, etc. So why not give the product ourselves? That was the thought.
Right.
Yeah.
Got it. And the second one is two-wheeler loans are very short tenor loans, 18 to 22 months max to max. So literally 20% growth at the fundamental level of growth. So how do we expand it? Actually start catering to adjacent loans which can be given to the same set of customer. And the third one which you mentioned is the portfolio concentration risk. Actually completely solving for that by offering a large bouquet of loans which is applicable to every customer who is there in the cohort.
Absolutely. Yeah.
Great. So let me understand, let me go ahead with the next question. It would be interesting for us to know that I'm sure as a very large institution like Muthoot Capital, frequently you would have to take decisions which would have a lot of challenging impact, right? Can you let us know any such difficult decision which, the management team has taken of late, and how did it go?
Yeah, so most difficult question is to take a decision on one decision which is being most critical, because I think we keep doing that every now and then. But yeah, going back in time, I think it was around the time when the new management joined around the end of 22 and beginning of 23. So I joined in May 23. My CFO joined in 22 November. So during that was the time when the new management came in, and that was in the aftermath of a COVID and 2 subsequent years of floods in Kerala. So one of the reasons why I mentioned in my previous question about de-risking was the fact that we had portfolio concentration both in terms of product as well as geography. So our portfolio was concentrated in 2 states of Kerala and Karnataka largely, and also on a single product, which was two-wheeler. Okay. And these 2 concentration risks led to a huge amount of deterioration in the portfolio when we had 2 subsequent years of floods in Kerala, 2018 and 2019. And then it was followed by COVID in 2021 and also in 22. Right. So almost 5 years of subsequent shocks. We had a huge issue on the portfolio. So when the new management walked in, we had about 25% GNPA, a portfolio which was stagnant for 6-7 years and all that. So that was the, and also a team which was depleted. So we did not have HODs. Our sales team was depleted, collection team was depleted, etc. So those were the times when you had to take those multiple calls as to what is right. How do you, whether you go for growth or you grow for portfolio consolidation, or you reduce the NPA. So there were multiple, variables that we were trying to, or multiple balls we were trying to juggle with together. And that was indeed the most challenging time in our career here in Muthoot Capital Services. And we were, with a concerted effort, I think all of us put our heads together and we were able to navigate all of that. So from there on, which the AUM of about 1700, 1800 crores with about 500 crores of NPA, we've now reached about 3500 crores with less than 4% GNPA. So I think that's from there we have traveled a long way. And today we stand at a much more formidable position compared to what we were. So all the decisions that we took during that time was indeed difficult yet exciting, because all of them finally, in hindsight, were the right decisions to take.
I think that's a great, interesting, and inspiring stories for a lot of people who would be looking forward to hearing from you and building business in the near future, or maybe are running their own business currently. For an NBFC, for most of the entities which are there in the market, what we see is one proven way of growing in an asset-light way is through the co-lending way. Lend with a larger bank, where the larger bank has 80% of the loan share and 20% of the loan share is from the NBFC. And Muthoot Capital is walking away from that model, or rather has walked away from that model, right? What has been the rationale behind it?
Okay, so I will take it as a continuation to the earlier question. So when I mentioned about the fact that we were stagnant, the portfolio was stagnant, and we were not able to, and we had a huge pile of NPA. The thought was, how do we, whether we go for growth or we go for portfolio cleanup and all that. And then, of course, the larger understanding in the room was that we need to go for both. So on one side, we clean up the portfolio, and on the other side, we go for growth. Okay. But as I mentioned, our sales team at that point in time, because of 4 or 5 years of not so great performance, people who had aspirations had moved out, and we had a very, very depleted team. Okay. And it takes some time to build your own team and get them into the rhythm and start doing those numbers that are really required for growth. Okay. And that was a time when we decided the easiest way to grow that time was to get into a partnership with smaller partners who are very, very strong in their own respective fields, and piggyback on their growth model. And they needed capital. We had the capital. They had the business know-how and the team, and etc., etc. So that's when we started aggressively into co-lending. Over a period of time, in the next 1 year or so, we built our own team, and our own team started doing numbers. Talking about co-lending, as you mentioned it as being attractive, there are two sides to it. Co-lending is attractive if you are the smaller partner and you do it with a larger entity, because you are able to conserve your capital. Okay. In our case, we were the larger partner. We were taking the 80% hit, and the smaller entities were piggybacking on our capital to build up their business. Okay. That, to my mind, is not a very, very interesting model, because you are putting your capital at a very low yield. Whereas when you're doing your own business, your yields are much, much higher. So about 800 to 1000 bips higher. So we were doing co-lending at some 12.5%, whereas our yield is about 22%. So on our own book. So eventually, when we saw that we had built the scale, and then by that time, in the next 1.5 years, some of the entities had become fairly large with us. And that was also another risk. While we were underwriting each individual customer, but the entire sourcing, collection, servicing was on the partner. So at a partner level, the risk was increasing, and that was there. That was when we made a decision that we will slow it down. So today, the portfolio, which at some point in time had reached 900 crores, has come down to around 400, 450 crores. And maybe in a year or so, it will deplete. It is not natural course. Okay, so I think that's the way it is. Having said that, we are also looking at now to co-lend with some larger entities, larger NBFCs, banks, for our own car CV businesses. And there the objective would be, because these are fairly new businesses for us, we would learn from more established players. Two-wheeler is a business which we know like the back of our hands. That's all.
Got it. That was very interesting to know, I mean, the trajectory was initially, it is like the inversion of the pyramid completely.
Yeah.
So the standard business model is the big brother is the bank sitting with the NBFCs and doing the co-lending. Here, the big brother scenario is Muthoot Capital with smaller entities on which you started, but then you also realize that they were also gaining the expertise and were growing up, right? And that is like an element of risk that enters into the business. So now it is a very selective co-lending, as I understand. Auto loans, you continue to be the leader in that space, so you lend yourself. For other areas into which you are newly entering, like the cars and the commercial vehicle lending space, you are definitely going to partner with much larger NBFCs or banks and lend it out, as is a new territory that you are gradually expanding into. Wonderful strategy.
Yeah.
I think that brings me to the next question, that what I understand is, understandably, Muthoot Capital has the lineage of 138 years of the Muthoot Group, the tremendous amount of learning. And maybe that's one of the reasons, all the decisions are so very matured in their quality. And maybe that has helped in your credit rating upgrade also, that I've seen that recently Muthoot Capital has got upgraded to AA-. In your own words, what do you think are the reasons which has pushed up Muthoot Capital to this, AA- credit rating level?
Yeah. So one more update that I want to give you here is that while you said we've got AA-, we've also got subsequently a AA. So we got one more upgrade. So CRISIL rated as AA-, and we got a rating of AA from Brickworks. That's another rating agency.
Okay.
So today we have one AA- from CRISIL and AA from Brickworks. And I think that's again multiple factors. You cannot have only one factor leading to a rating upgrade. So multiple factors. One of the important factors, of course, is our group legacy and the strength of the group. They look at the entire group level rating as well. So I think all the other NBFCs in our group also got a rating upgrade alongside Muthoot Capital Services. So that's the group strength. Second is our portfolio quality improvement. So as I mentioned, at some stage where we were at 25% GNPA, to bring it below 4% GNPA. Okay, that was a great achievement for Muthoot. Yeah, so that was a great achievement for Muthoot Capital Services. Also, they look at, during the time of the rating and during the discussions that happen, they look at all our processes, the system, our governance practices and all that. So the way we have completely digitized the organization in the last couple of years, all our processes are, digital now. There is no manual intervention. The credit underwriting model, the amount of AI that we have brought in. So all of that were factors at play to decide the final outcome of the rating.
Got it. So for our viewers out there, Muthoot Capital's rating has got upgraded to AA- from CRISIL and AA from Brickworks.
From Brickworks, yeah.
And other entities under the Muthoot Group, have also undergone credit rating upgrades. Great.
Yes. Yeah.
Now let's move on to a slightly more philosophical question at the company level. As Muthoot Capital grows at this fast pace, as a CEO, what is the one thing that you don't want the company to lose as you go along with it?
It's an interesting question. I would say that at our at the senior most level, all our HODs and me, we have a tremendous alignment in the purpose that we are driving. Okay, so we have our strategic objectives and we have complete alignment on what we want to achieve, and everybody runs it as their personal agenda. I think that is one thing that I would want to continue, because what is possible for a smaller company is often not possible for a larger company. When you have huge number of verticals, more people, we have the alignment becomes difficult. So I think alignment is definitely something which I want to continue, and also the humility that we have shown when we have been able to perform well. Okay, so we want to continue with all the humility and continue with alignment and passion that has brought us till now, wherever we have been.
So the purpose of building Muthoot larger and a further larger entity, that remains fixed, and that is something that you definitely want everybody to continue with. Understandable. I think I'll take a cue from the, from your last answer that you gave before this, wherein you mentioned that Muthoot Capital is using AI in a lot of those underwriting works. I wanted to understand in this AI age, like you mentioned, Muthoot has seen all the phases and now the AI age. How much is Muthoot Capital actually leveraging on AI? Number one. And number two, if you can tell us what is the biggest opportunity that you see here in using AI in the NBFC business?
Okay, so I think this is one space where we have made very huge strides. Okay, so I think today, uh, forget about being a follower. We are actually benchmark in some of those space. Okay, in terms of digitization, in terms of use of technology, in terms of AI. I think we created some benchmarks. So there are things that we've done which large entities are still trying to do. They may not be exactly following us, okay, but the use case was there in the industry. But we've been faster, we've been nimble-footed to have been able to implement that much faster. Of course, you would know larger entities will take, because their systems are legacy systems, they'll take much more time to implement. We've been nimble-footed in that way, and we've like kind of very well entrenched with the AI today. Okay, we recently did a AI training for our entire top management, all HODs, and the critical resources in each department who will then take it forward. Okay, we have already got AI in our customer service where the bots are calling customers for welcome calling. We have AI in collections where our entire X bucket calling is done by bots. Okay, the first 7 days bots call and they achieve about 60-65% efficiency, and then it gets handed over to telecalling and then subsequently to the field team. So about the first 10-15 days, largely the collection is done by the bots alone. Okay, and then we are able to do it at scale because bots have no capability issue. A human caller will be able to do 100 calls, 150 calls in a day at the maximum. Here, 1 lakh calls can be done simultaneously. Okay, so that's the advantage that it brings in. Our collection infrastructure entirely is the strategy. Collection strategy is entirely built on AI ML models where we run the models prior to even the natch is presented, and so we have a fairly good idea. So the model will split the customers into 10 deciles, saying that these are the 5-6 deciles who have very high probability of clearing, and these are the 4 deciles where there is a higher probability of bounce, and therefore we calibrate our collection strategy accordingly. Okay, so the high probability bounce will directly go to bot calling rather, and the low probability we give them a nudge by SMS, so that there is a cost efficiency there. If you're going to call every customer, there is a cost involved there. But if you're just sending a nudge on an SMS or a WhatsApp, the cost is much lower and the purpose gets done. Similarly, the post bounce, so whatever gets bounced, there again we have a roll forward scorecard, which again divides the customers into deciles, and based on that, the collection strategy is defined. In our credit underwriting, we use a lot of AI ML models for underwriting. The scorecards are based on ML models, and the implementation has AI used in that. We, I think, would be one of the first people to have brought AI use cases in audit and compliance. Okay, so our policies are configured into a bot.
New.
Yeah, so people have used it for collection in sales and customer service, but we've implemented that in audit and compliance. Audit and compliance, you would typically know that they look at a very small sample size, maybe 100, 200, 500 cases, they will do an audit. And then they will extrapolate the data to say that maybe in this small sample there is a 5% deviation, so maybe you extrapolate that. But what we have done is that we have configured all these policies, the two-wheeler policy, the car loan policy, everything into the bot, and then the bot runs at scale on our entire database. So you can say that audit our entire disbursement of 24-25, it can do that because the policy is already configured, and then the bot throws up whatever were the deviations. Okay, so even in our compliance mode. So that's, I think, one of the benchmarks that we have set in the industry of that. So I think AI is something which we are very, very gung-ho about. And I think collectively, so we don't believe that AI is going to replace humans, but people using AI will definitely replace people not using AI. So I think we using AI extensively to improve our productivity, reduce our cost, and improve efficiency in the system overall.
It's a very comprehensive AI strategy that Muthoot Capital has in place. It becomes very evident from what you mentioned. And what I realize sitting on the other side is that it just doesn't stop, remain at just the implementation level. It's right from the top management to the last person to the collection leg of the loan collection engine that is there, to stretching forward to even audits and compliance at scale. So I think that's a very robust system which you have in place, and no wonder it is giving phenomenal results. And that takes me to the next question that I can see is that you have set a target of reaching 4,000 to 4,200 crores of AUM by FY27, and your long-term ambition of achieving 10,000 crores. What do you need to achieve this to get here? And I understand maybe AI is one of those fundamental legs which you have put in place and the results are already showing up. But at a broader level, if you can say the other things also that needs to be done to achieve these phenomenal numbers.
Yeah, so I think AI is more from a guardrail perspective. Okay, so it's a so you need when you are growing at that pace. So if we do 4,000 crores, that will be more than double of what we were when we came 2 years back. So when you are growing at that rate and then looking forward, we have set ourselves a target of 10,000 crores by 28-29. Okay, and that is again not that's just a pit stop. Then we go further from there on. So when you are growing at that rate, of course you need strong guardrails, and I think AI ML models will give us those guardrails, because human guardrails will again be able to do certain sample checking, screening, etc., etc. But AI can be used to build it at scale. But then our other, the pillars of growth will continue to be diversification. So that is one of the reasons why we decided to diversify into multiple products, okay, and then multiple geographies. So as I mentioned earlier, our product concentration was in 2 states, which was Kerala and Karnataka. About 60-70% of the entire portfolio was concentrated in South. We are today present in 22 states, okay. So we are there almost everywhere where a large chunk of business happens. So the strategy is diversification in geography, diversification in our product range, and diversification in our sourcing channels. So again, the third risk that we ran earlier was having only one channel, which was a dealer channel to source business for us. Today we have multiple channels. So the dealer channel continues to be the largest contributor, but we have a cross-sell vertical which we have created in-house, where all our group companies contribute to our products. So we have a business head managing that vertical, and we call it group relations and digital. Okay, so that vertical is responsible for getting, so as I mentioned earlier, where we do a scrub on our group company base, and we see that a lot of customers of FinCorp and Microfin and MHFL take two-wheeler, car, CV, etc. from outside of Muthoot ecosystem. Now we channelize all of them to flow into Muthoot Capital first.
Right.
So basically giving us the first right of rejection. Only if we reject those cases, go outside the ecosystem. So that channel is now contributing about 15-17% of my business, and our target is to take that to about 40% of our overall business. And that channel also doubles up as a digital channel, where we have tie-up with various marketplaces. From there, digital leads come in and our team converts that. We've recently got into a tie-up with CSC, which is a customer service center, which is under the Ministry of Information Technology, the Aadhaar Seva Kendras. So they have, 6 lakhs villages where you have centers there. And each of the centers are managed by somebody called a VLE, which is a village level entrepreneur. So we got into a tie-up with them. We signed the agreement a couple of weeks back in Delhi, and the tech integration is going on. Once that is done, they will start passing on leads. So every person who goes to the Aadhaar Seva Kendra, and which is a huge number per day, because there you have all the government services. The VLE will be talking about the other products also, like loan, FD, etc., etc. And Muthoot Capital will be one of those financials there, and we will be present on that platform. And anyone can choose Muthoot Capital, and the lead flows to us seamlessly, and our people get in touch with them and close the lead. So we ourselves fund on the product side by getting into more products. We've de-risked on the geography by getting into newer geography and spreading far and wide. And we have de-risked on the channel side by getting into adding new channels. So I think these are the steps that we have taken and which we think are adequate to take us to that 4,000 and 10,000 numbers in the shorter term.
Wonderful. Very, very, aptly, articulated, Mr. Mathews. I think product diversification, geography diversification, sourcing channel diversification, and being able to cater to much larger cohort in a much more efficient way. Wonderful.
And build guardrails
There's
with
one
AI,
interesting
ML, etc.
with the guardrails of AI, ML, which puts the business in a very sound ground. Understood.
Yes.
Because at that scale, definitely automation and AI support is a must for any entity of this level. There's one very interesting fact that I came to know about, and for our viewers also, it's important to know. Very interesting fact. There are a handful of NBFCs in the country. I think around, if my figure is correct, if I recollect the number correctly, it's around 15 to 20 odd NBFCs in the whole country out of over, I think, close to 10,000 NBFCs. Only 15 to 20 NBFCs have the permission from RBI to offer public deposits, which is NBFC deposits. Muthoot Capital is one of those rare few NBFCs who has that permission, who has that blessing from RBI. And I know Muthoot Capital recently crossed 100 crores worth of NBFC deposits, public deposits. Is it a number important for you, and how do you see this line of funding?
Yeah. So first of all, you are absolutely right. The initial number of licenses are about 200, 250. But since then, RBI has been, taking back those licenses, asking NBFCs to surrender. And you're right, we are among the, 15, 20 who still have the license. And then I think far fewer are active. So I think the active ones are the very big names, okay, and alongside us. So yes, I think that's indeed a feather on our cap. When you're asking about whether 100 is an important number, it's a very, very important number, because a couple of years back when we started this, we were only at about 22 crores of FD. Okay, and then we put up our online FD module. We brought in a new core banking system where FDs could be booked. Earlier, it was an in-house built Excel-based platform. And of course, the AA rating which we got, and AA minus and AA rating that we got has been a huge, positive step in that direction. I think it's very important in the sense that shows the trust that customers have in an NBFC. For borrowing, anyone can come to any NBFC and borrow, because it's them taking money from us. Okay, but when you are willing to put your hard-earned money in an NBFC, that shows the trust that you have for the brand. I think from that perspective, it's a very, very important milestone, crossing that 100. In fact, last month alone, we added about 27 crores of FD, and today we stand at about 125 crores of FD. And we can go up to about 1.5 times of our net owned funds, which is closer to 1,000 crores is what we can garner as FDs. And that's what we are targeting in the next couple of years. And with this AA rating, I'm sure we will be able to do that, because that allows us to go pan-India with our FD. It says that unless you are AA, you will not be able to go pan-India with the FDs. So with this rating, this is what we intend to do. We already initiated board approval, and we would be soon, God willing, going pan-India with our FDs.
Wonderful. And that's great information for viewers as well. And So the FD booking is completely digital, if I
Yes, that also is fully
understand
digital
correctly.
with a video KYC and all that. So we've done all that a bank does today. So all the compliance governance are equivalent to today. RBI also doesn't distinguish us like banks and NBFC. They call us REs, regulated entities. So I think as a
Hmm.
middle layer NBFC, our compliance requirements are almost similar to that of a large institution. And plus, we being a deposit taking NBFC, it further becomes stronger. The compliance expectation from an entity like us, who is a deposit taking NBFC, is much. Uh,
Yeah.
yeah.
So if an investor, you know, has to look at Muthoot Capital for the next 3 years, what would be the top three things that you would ask that investor to watch out for?
So I would say there are multiple things, but I think they should watch out for our AUM growth, the ROA that we are going to deliver, our portfolio quality improvement. No, the way we are investing in customer service, in customer excellence. We would say we have this what do you call? We don't talk about customer delight anymore. We have customer obsession. So we already from a very small entity like us, we've already started NPS, which is Net Promoter Score. So after every loan gets disbursed and after every payment is made, our customer gets an SMS where he rates our services on a scale of 1 to 10, 9 and 10 being promoters, 1 to 6 being detractors, and 7 and 8 being passive. So that's a internationally acclaimed model. And any score, any positive score itself is considered good. Score of 50, etc., is considered excellent international standards. We have an NPS score of around 80. So that's a phenomenal number to. While the number
That's
of
phenomenal.
customers who have given the response is fairly low now. It would be about 10-12%. But then I think in any NPS survey, the participation is low, and especially with our two-wheeler loans profile, it may be a tad lower compared to the industry. But I think the response is phenomenal, and 80 is like international standards on NPS. So I think these are the things that we
Yeah.
are fully focused on. That's what investors should watch. Also, are the governance practices that we have put in are pretty much strong. We also got a positive thing from RBI in our last audit rating also.
So to summarize, for investors, what you mentioned are number one, the numbers, which is the AUM growth, the ROA. Next, look at the customer service quality or the customer excellence, which now, you so beautifully mentioned, it is now customer obsession for the company, and which is measured very rightly in the NPS score, wherein Muthoot Capital scores an 80, which is a phenomenal score, which means customer, the company has moved beyond customer excellence to customer obsession, like you mentioned. You're already in that stage. And the third thing is very strong governance.
Yeah.
I think that sums up, the overall forward-looking approach for any entity, and any investor should find a lot of interest in these areas to look at Muthoot Capital as an entity. We'll close this wonderful discussion of ours with a surprise element, and that is a rapid fire round. So, can we begin with a couple of questions on the rapid fire round?
Sure. Please shoot.
Cool. Let's get started. So here's the first question. One word that best describes Muthoot Capital today. One word.
One word.
Yes.
I would say phoenix, because we've risen from the ashes like a phoenix, and we are on the growth path. So I would say phoenix.
Beautiful answer. Second question. One quality you look for when hiring a leader.
Hiring a leader.
Yes.
So ownership and integrity. So one should be able to, own his side of the business, and of course with integrity. Integrity is the first and foremost thing that we look for. Anybody, not just the leader, but in the entire rank and file. And somebody who doesn't wait for instructions but takes ownership and drives it. So that's what. So we are trying to build an entrepreneurial culture here where people own up their own up everything that they do, and also give them the freedom to experiment and do well for themselves.
So shall I place ownership ahead of integrity? I mean,
Yeah.
bigger in component.
I think it will be similar, but yeah, ownership and integrity would go hand in hand. So
Hand in
ownership
hand.
with integrity, or let me say ownership with integrity.
Ownership with integrity.
Yeah.
Cool. The next one is quite tricky, and you have to take a hard call. Two-wheeler or four-wheeler?
I wouldn't say either. I would say neither two-wheeler nor four-wheeler. As I mentioned, we have in the last year we redrafted our motto to say turning wheels, changing lives. We want to be a mobility solutions provider. Okay, so
Mobility solution provider.
any solution on mobility, we want to be there. In fact, a very interesting anecdote I want to share with you is, last week we were in Bombay, my CFO and me, and we were in discussions with the company, the name which I am not able to disclose now because it's just still very nascent stage, where we are talking about being able to offer finance for drones. Okay, this is an agri-based product where drones are used to to spread fertilizers, spray fertilizers in field. So human capital, one, there is a dearth of people in farming because people are moving towards the cities for this thing, and
Right.
and of course the reach would be much slower for a human to spread fertilizer in an acre of land would take certain amount of time. This machine, this drone can do it in a matter of minutes or hours. So there is a proposal that has come our way. We are exploring that. We've asked for more data. So we want to be, so we want to be a mobility solutions partner for anybody. So I'm not saying that I'm getting into drones, but that's a interesting, I think, avenue that has come up. So neither two-wheelers nor four-wheelers, we want to be a mobility solutions partner for our customers, for the ecosystem. Yeah.
A super interesting story, actually. From a simple question of two-wheeler, four-wheeler to actually the fundamental thing of being mobile and being able to put the thrust on mobility for anything, wherein you mentioned about this agri-tech company that is going to actually use drones to spread fertilizers and solve such a pertinent and increasing problem in the country, wherein farmers, mostly the next generations, are moving to cities, then who will take care of the farming? And so you have to get it automated, and being able to provide support to that, obviously that's like a game changer. So that's a wonderful story from,
So I
from
think
a simple
these are
question.
the things that will, we always say that we are a nation builder as a group. Okay. And these are the small things that, which can be a differentiator, because that is a space where not many people are getting into. Okay. But that's the future area of growth, because most of the other developed economies have already moved into technology in farming, while we are still way behind.
That's
so
true.
I think somebody has to take the lead, and hopefully we will be able to do that.
Yeah, US and China are already there. We would be getting into that league very soon. True.
Yeah.
So my next question is, one business trend which you think in the financial services, which is perhaps overhyped?
Overhyped. I think growth alone without looking at profitability and quality. I think there are lots of this, what do you call, fintechs or somebody who come in with an initial seed capital, and then they tend to grow fast, but then later on they end up in a bottleneck, stumble. Okay, so when I talked about legacy, I missed mentioning that, 1 every 5 companies don't cross 1 year, and around 50% of them don't survive more than 5 years of new companies that get formed. So I think growth at the cost of quality or ROA is something which the new entities try to really show growth. Okay, and there's a lot of clamor around that, but I think that's overhyped. In the long run, unless you are satisfying your investor in terms of growth with profitability and all that, you are out of the game.
True. A lot of VC pressure, as they call it.
Yes.
So, moving on to the next question. One book or person or experience, any one of these three that you can choose from, which has actually influenced your leadership style.
One book or person?
Person. It can be a person.
Okay.
Or it can be an experience also, which has made an impact on your leadership style that you own today.
I don't know whether it's on the leadership style, may not be, but I think Rafael Nadal, I think he's a brilliant guy. Very early on his career, if you read his story, and there is a Netflix series now on Rafa. He was diagnosed with a, what they call as Mueller-Weiss syndrome, where, your bones waste itself. And it's a very interesting documentary. If you see that, he had to actually numb his veins and legs so that he doesn't faint the pain in the French Open. Okay. So how do you play with your legs being numb? So it was only muscle memory on which he was like playing the game, and he was winning. He's won some 12 French Opens with all this pain. So I think in the corporate world also, you have to sometimes numb your feelings and keep playing on, keep doing your job. So I think that way he's been an inspirational figure. Well, there are multiple GOATs. You talk about Federer and Djokovic, etc. But I think Rafa has been truly outstanding and is really a GOAT and really inspiring. The story has been really inspiring. If you get a chance, please watch that documentary on Netflix. It's amazing, yeah.
Sure. We'll do that. I think Rafael Nadal definitely is an exemplary tennis player. A lot of learnings from him, and wonderful. I think that's a beautiful personality or a beautiful person, to take inspiration from. That brings me to my last question. If you weren't leading Muthoot Capital, what else would you have been doing?
That's an interesting question. So I've been in finance for 30 years. So I don't know, Muthoot Capital is a part of the larger BFSI space. So I've been in this BFSI for about 30 years. And if I were not in BFSI, what would I have been doing is a difficult question to answer. But maybe something to do with sports. So I've been an ardent sports lover, represented my school in the nationals during my school days in table tennis. So maybe I would have done something in sports. I don't know. 30 years into one industry, it's difficult to say what I would have been doing. But yeah, that's one thing that I would have loved to do had I not been into the corporate world.
So you have represented, you have played at the national level in table tennis.
In my school days, yes, I represented my school in the nationals. Yeah.
That's a fascinating background about you, Mr. Marcos. Absolutely. I think I had a wonderful, enlightening, thoroughly enjoyable discussion with you, understanding about you, your background, and Muthoot Capital at large. And I'm sure our viewers would also, appreciate a lot of learnings from here. For I think everybody, right from somebody who is in the job, from the business, to looking at starting something in their life, to already doing, building a business. There's tremendous amount of learnings over here from you, from your life, and from Muthoot Capital at large. It was a pleasure speaking to you. Thank you so much for your time.
Thank you so much, Abhijit, for your time, and thank you for having me. And once again, thank you to all our viewers as well. Thank you.
Fixed returns do not constitute guaranteed or assured returns. Investments in corporate debt securities, municipal debt securities, securitized debt instruments are subject to credit risks, market risks, and default risks, including delay and/or default in payment. Read all the offer-related documents carefully.